Welcome back, everyone, to Not Your Advisor with NYU Grad on Wednesday, May 15th. The CPI numbers are behind us, a lot to cover, so let's jump right in. I'm going to name this podcast Silver is outperforming gold and the Nasdaq year to date. That's right, folks. And I'm going to go through these numbers with you, but crazy day in the markets. Although volume on the SPY, while better at 54 million shares, it's still below the average daily volume, which is creeping lower each day to 68 million. But that's something to watch, but very bullish day in the market. We had 1,453 new highs versus only 114 new lows. We had 69% of stocks advancing versus 27% declining. 31% of stocks were below its 50-day moving average, and 29% were below its 200-day moving average. Pretty much everything was green in the mega cap land, other than a few names. And I'll just point those out because those are easier to point out like sore thumbs. Tesla down 2% on a day like today. Amazon down 0.58%. I believe there was some news about an executive leaving. I'd have to look into more reasons why, but who cares why? They could not rally when the entire market was up. Disney down 2.45% today. Not good. Looking at the sectors, pretty much everything was green except for energy, down 0.2%. We had technology leading to the upside, up 2.19%, real estate up 1.4%, utilities up 1.3%, healthcare 1.25%, communication services up 1%, financials up 0.89%. So broad rally throughout the session. Let's see. Let's keep going here. So I did want to share an update on silver and the cup and handle pattern. I had posted, I believe, a week ago with a video from Mike Maloney about not only a near-term cup and handle from like 2010, but also a 44-year cup and handle that has been forming on silver. If you adhere and believe in the cup and handle pattern, they don't always pan out, but the measured move for the near term blue cup and handle, which I've noted on the chart here in the show notes, would be a move to potentially $47. And if you look at the red cup and handle that goes back 44 years, the measured move once we break out of $41.50 would be roughly about $80. If this pattern plays out, we haven't broken out of either cup and handle. So it still needs to confirm, but it was really strong today. So I did a quick performance graph of SLV, GLD, the SPY index or ETF SPY and QQQ year to date. SLV is outperforming all of the above. SLV is up year to date 24%. GLD is up 15.9%. SPY is up 12%. And the Qs are up 12.5%. Now keep in mind this is year to date. If you go back 12 months, the Qs and the SPYs are outperforming. I've also posted a layered chart of SLV versus the Qs during both the great financial crisis coming out of that, as well as post-lockdown from COVID. What you'll notice here on both occasions, whether you're looking at the great financial crisis and coming out of that, or the COVID lockdown crash and rally, silver participated in the rally almost one-to-one with the Qs. And if you even look at the wider range of the chart, which I haven't posted here, silver typically will go down and lose that rally before the indices. So it's almost like a canary in the coal mine. It'll participate in the rally, but also be the first one off the dance floor, signaling, hey, the party might be over. The music may stop very soon. The other thing that, for those that don't know much about silver versus gold, silver is very ubiquitous in making solar panels, electronics. It's highly conductive. Not as much as gold, but for the price per ounce, silver is hard to beat in using for industrial metals. It's in consumer products. It's in jewelry, obviously, in mirrors, photography equipment, currency, obviously. And unfortunately, I read that it's like 2 ounces on every warhead on a Tomahawk missile. So I will post, I simply asked Bing Copilot, where is silver used in manufacturing technology? And this is the answer it spit out. I will paste that in the show notes as well. Before I keep peeling the onion here, if you all can do me a big favor and click on the logo for Spotify or Apple Podcast. If you're logged into any or both of those, just it'll directly link to the podcast. If you can give it 5 stars, I would greatly appreciate it. It would help others find the podcast. It is still by far the only podcast covering stock markets in under 15 minutes, no advertising, no politics. So do me that favor. Thank you very much. So what stuck out? So I'm going to also include a screenshot of silver performance today versus many of the top names in the semiconductor stocks index. Silver futures contract was up 4.3% today, beating AMD, which was up 4.25%, beating KLAC Corp up 4.08%, beating Broadcom up 4.07%. It beat pretty much all of the semiconductor group outside of like SMCI. So really bullish day for silver. We definitely need a pullback here, but if we're going to break out of this cup and handle without a pullback, we may go on silver north of 30 fairly soon, like tomorrow. What was strong today? I'm going to go through a list. This is all percents, okay? MicroStrategies 15.8, SMCI 15.8, BITU 15, Bitfarms 14.9, Marathon Digital 11.7, Dell 11.2, Coinbase 8.3, IBIT 7.4, FBTC 7.4, DR Horton Homebuilder 6.47, K Hovani Homebuilder 6.27, Toll Brothers Homebuilder 5.92, Clavio 5.80, Beazer Homes Homebuilder 5.4, KB Homes Homebuilder 5.3, Lennar Homebuilder 5.2, Pulte Homes Homebuilder 5.07, MongoDB 4.7, DraftKings 4.5, Spotify 4.4, Zeta Global 4.4, Silver I already mentioned 4.3, Roblox 4.2, AMD 4.25, and Broadcom, which I mentioned 4.07. I'm not going to go into the 3%. That was just 4% green. Let's go into the weak shares. GameStop down 18.87. I told you to stay away from this. Rivian 8.85 to the red. UVIX, which is bullish VIX, down 8.01. Biddy, which is short Bitcoin, down 7.5. The VIX itself down 7.45. New York Community Bank down 5.66%. Reddit down 4.3. Instacart 4.2. You had, let's see, Affirm Holdings 3.4. Paysafe 3.3. Natural Gas Futures 2.7, Birkenstock 2.6, ARM Holdings 2.5, Disney 2.45, Tesla 2.01. The 10-year yield down 2% closing at 4.35%, and then CarMax down 1.86. If you own a stock that cannot rally with such a bullish day, you need to inspect why you still hold that stock. For the free members, continue to watch yields. Continue to watch the 10-year, the 2-year. Continue to watch the Magnificent Seven, the semiconductor group. Continue to watch the macro data, which aren't going to present themselves in the numbers right away, but TrueUp.io has a great website that tracks tech layoffs, credit card delinquencies, which I've linked, the Fred data from Indeed.com on job openings, and the true rate of unemployment. Now, keep in mind, today's action was a reaction to the CPI numbers that came out today. It was not as high as expected. Again, these numbers are BS, but that is what the stock market is trading off of, on phantom fantasy data. It is what it is. We have to trade what is available to trade. And free members, I will see you after the Thursday session. For the premium members, please stay on so we can go through some additional charts. All right, bye.